Here we go again, back to work here tonight. Hope you guys had a fantastic day out there, but you know what I always say, right? We're only as good as our next trading opportunity. Time to get back to work. It's Tuesday evening. It's September the 14th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight, very important job tonight, get us ready for the best trades, setting up for Wednesday's trading session. I got a great video in store for you tonight. Charts are already in the background. As you can see, S&P, Nasdaq, in gold is ready. Glad to see you already right along with us. Got a bunch of good trades on our radar here right now. Some big moves in the markets, right? Big move up on the gold, big moves down on the S&P and the Nasdaq. We get some ranges still during this quadruple witching week. We talked about quad witching last night. We'll talk more about it here in this video tonight. So we got some big moves. Some ranges, looking for some breakouts and failures and reversals. I mean, there is, you know me. By the end of this video, I'm going to make sure you know the best setups for tomorrow. At the same time, I'll also make sure to keep you out of trouble, right? Give you some stuff to avoid tomorrow, whether you're trading on your own tomorrow or whether you're trading with us every morning in our trade room. Before we jump into the video tonight, though, as always, I want to make sure you subscribe to our YouTube channel. I publish this video with my best trade ideas every evening on this YouTube channel, so make sure you subscribe. That way you don't miss our next video newsletter. If you have any questions for me, don't forget, drop those questions in the comment section. I'd love to get any questions you guys have answers, so don't be bashful in the comment section. And if you guys tune in every evening, if you enjoy this video as much as I enjoy making it, do me a favor, hit that like button, smash it if you like to smash those like buttons. Always appreciate you guys tuning in every evening, but make sure you subscribe. In the meantime, enough of the intro. Let's get this party going. I'm a little bit late, as you can see, to this video. Busy day here in the office. That's all right, though. We're going to finish up strong here, as always here. What type of markets do we have here for tomorrow? Boy, lots of big moves, right? Big move down on the S&P. Big move down on the Nasdaq, big move up here on the gold right now. Lots of momentum, right? Lots of momentum on the Emini and the Nasdaq right now. Lots of bears in the market right now. Would love to sell into some bounces on the Nasdaq and the S&P. We have a range right above us. So I'm definitely open-minded to trading a reversal. I would not complain about a reversal tomorrow. So we'll talk about how to sell into that pop. We'll also talk about how to trade that reversal, because you really can't trade the reversal just yet, but make sure you stay tuned tonight on the video. We'll talk about how to qualify and how to capitalize on that reversal. We've also got plenty of space down below us, so if we keep on grinding down, I got some great breakout trades going lower here for us on the E-mini. So the S&P, Nasdaq, plenty of setups we're tracking for tomorrow. Gold has that big blast higher. There's an open loop up there. A lot of momentum for the bulls. I would love to buy this thing and keep it going here. Get a bunch of big targets here, but boy, there's a lot of resistance up here. Get a bunch of levels of resistance with a big range below. Am I crazy to think about shorting this thing? Yeah, right now it's tough to justify getting short on such a very big, strong move here, but I got a great reversal pattern to trade that turn on the gold. So if we can get the reversal, we'll definitely take that. Obviously, buying pullbacks and buying breakouts going higher, if we can get the signal on that, we'll look for those as well. But I'll tell you right now, gold might be the most difficult out of all three of these. And I'm going to go into more details of why I say that as we go deeper into this video. Now, setting up for tomorrow, let's not forget about the schedule for tomorrow before we jump into these charts here tonight. Tomorrow's a Wednesday. Now, the next couple days, we're going to start going into quadruple witching. As I mentioned last night, we've got the quad witching, kind of almost known as a trader's holiday on Friday, right? All four asset classes are expiring at the end of the day on Friday. It's like OPEX plus one, right? It's got a bit of a self-fulfilling prophecy to it, right? People know it's OPEX. Again, it's all four asset classes expired. That's why they call it quadruple witching, and it kind of has a life of its own. What's going to happen though is the next couple days, Wednesday, Thursday, probably not so much Friday, but Wednesday and Thursday, if you're a big money manager or you're working for a trading firm with a lot of capital under management, the next couple days are going to be when you have to kind of balance things out, right? Make shifts in your portfolio in addition, right? In anticipation of all 4 asset classes expiring on Friday. Remember, the futures markets are very widely used for hedging, right? So hedging equity positions, options positions, cash positions, right? So there's a lot. Again, if you work at a big trading firm right now, this would be a very busy next couple days for you, right? As a hedger in the futures markets, as a speculator or a day trader, right? Like we are in the futures markets. We love the futures markets because they're liquid. They're very consistent. They're the best. I think the best for short-term trading because they're just so consistent. Same thing over and over again. Very, very easy strategy that we use in our trade room. Bottom line, though, is next couple days, you definitely want to anticipate some high volume. You're not going to see volume drop very much. At least you shouldn't. It's usually high volume and a lot of very unpredictable jumps back and forth. So I'm not going to say the next few days are untradeable because you'll probably never hear me say you can't trade a day. I don't really believe in that. You can't trade this, you can't trade that. I'll tell you the exact same thing I tell all of our members, everyone in the trade room: trade whatever the market gives you, right? If it's kind of nasty price action, sit on your hands and wait. But if you get some nice, good setups, some good momentum, some good price action signals, we can definitely trade the next couple days. But be aware, though, next few days, we're probably going to see high volume, lots of kind of grenades going off in the market back and forth, right? We saw a bunch of big pops and drops today, and that could be a little bit of an appetizer of what to expect over the next couple days. I could be wrong, too. Again, we may see some nice smooth sailing over the next few days as well, but usually as we go into those last couple days of the week, that Wednesday and Thursday, all the big players in the markets, they're starting to manipulate positions, balance portfolios, open new positions, right? Close out big positions as they begin to anticipate quadruple witching. So be aware of that. We do expect high volume, but a definitely uptick in unexpected jumpiness back and forth in these markets. Now, tomorrow, as far as the news goes for tomorrow, got a lot of news here for tomorrow. The big news, of course, is going to be that industrial production number at 9:15 Eastern time. I don't anticipate that number tomorrow to have the same impact. That CPI report, we talked about the CPI reports, an inflation number. It's a big deal. It's a big deal we saw today, and we saw, how much the market reacted to it here. Probably not going to see as dramatic of a reaction tomorrow at 9:15, but that is the big news. And so if you could only be at your desk for an hour or so tomorrow, that kind of 9:30 to 11 o'clock block tomorrow morning in our trade room, that would really be where kind of the meat and potatoes are going to be. Now, I talked about this last night also. There'll be no newsletter for the rest of the week this week. I'm taking some time off in the afternoon. Again, quadruple witching is very well known as a trader's holiday. It happens at the end of each quarter. I look at it as a good way to get out of the office, get other stuff done so I can really buckle down and be 100% focused when I come back next week. Because once we get through quad witching, the end of that third quarter, it is all out sprint all the way basically until the third week of March. Really, until third week of March, the quad witching third week of March next year. So be aware of that. There'll be no newsletter tomorrow night or Thursday night. Hate to leave you guys hanging, but that's it is what it is. We'll come back to our full schedule here next week, though. Don't forget, we're gonna prep the charts tonight. We'll put the strategy together tonight. And, of course, tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern time, you better come out there and trade it with us in our trade room. I'll put the membership links you guys need below this video on the website or in the description of the YouTube video. So grab that link, get registered, and I hope I'll see you there in the trade room. So now you guys have a pretty good idea of what to expect tomorrow, and again, right, kind of what to anticipate over the next couple of days. Remember, we're traders, right? We're traders, so we're going to take whatever the market gives us. We're probably going to see some jumpiness over the next 24 to 48 hours here as traders start to kind of rebalance their portfolios into quad witching. But hopefully things are nice, smooth, and sailing. And if they are, we'll just crush it no matter what, right? We'll take whatever the market, gives us here. S&P, Nasdaq, gold, everything's all set to go here. Why don't we grab the S&P first? Now, a lot of what we're going to talk about on the S&P can also be applied to the Nasdaq as well, right? Both the S&P and the Nasdaq, big moves down today after a big pop up, right? So big move down on the S&P, big move down here also on the Nasdaq. So we definitely do have very, very strong similarities here to the S&P 500. What's the most important clue right now? What are the most important kind of factors on this chart? The most important thing I think at this point is we're very bearish into a trading range. And that trading range acts like a magnet, right? So oftentimes, and we talked about this a lot last night, when you have a bear market into a range like this, the market will oftentimes pop and come right back down into that trading range. Now, sometimes that pop will kind of get its hooks in it and it will reverse. And then when that happens, we can trade a pendulum swing. We can measure the amount below the range, amount above the range, and we can trade what we call trade the rotation. Right? We can trade that rotation back up in the opposite direction. That's kind of the general idea of where we are. If you think about it too, this range above us is also a magnet. So you can definitely kind of see how this whole area could be a great level of resistance to come right back down. And again, if it doesn't hold, right, it may pop back up and we can get that, full, again, we call it rotation, right? That rotation back up in the opposite direction. At the same time, it's a very strong move. It's a very strong move. And, I think one more kind of piece of this is, we saw something like this earlier where it went 1, 2, 3, right? Strong move down, shallow pullback. Set trap up there, how they ran it lower again. And we talked about this last night, right? Kind of trading that rotation. Great setup there. Same kind of thing here, right? So we're going lower, shallow pullback. So we may definitely see some more traps here and a strong run going lower. If we do go lower, again, another measured move waiting down there at 44.10. So bears have a pretty good shot. They get a pretty good idea of where this bears want to go, that 44.10 area. If it really falls apart, we get that 43.90 area for tomorrow. So we get a pretty good idea where the buyers want to go. We get a pretty good idea where the sellers want to go here right now. How do we trade this stuff right now? What do you think are the best ways to trade this? Well, again, we're bearish, so I want to find levels of resistance to sell off of. I've got my channel drawn off that low. There's one channel there. I got this really nice channel all the way. I love how that channel, see how well that channel kind of fits up top there. Boy, I mean, this almost looks like it is just made for it, right? That big low right there, big high up there. I mean, how much would I love to short that pop as well? So at this point, a lot of strength going lower here. The bears are obviously very aggressive right now. And again, we may continue to see a lot of volatility going into tomorrow. There are kind of three basic ideas of how to trade a pullback on this. Three basic pullbacks. You probably have heard me talk about this before. Shallow pullback traps, modest pullback failures, deep pullback two-try failures. Okay, let me show you kind of what I mean by that. And we talk about this quite a bit here on this newsletter, and we do a pretty good job of this stuff in the trade room too. So shallow pullback trap. Right? So shallow pullbacks, I can easily see why we might get a shallow pullback here. It's a very strong move down. There could easily be like a smaller channel right there too. So there's no reason why this thing couldn't just shoot lower. The hard part is this is a big move, and I really don't want to sell right into those lows right now, especially going to the overnight. If this was 8:30 tomorrow morning, I'd be a whole lot more open-minded to being a little more aggressive right now. But I got to be a little patient because, again, the overnight session, not exactly the most reliable time of the day. If I can get a trap on this, right, like a one-try, a two-try trap, that would really be the safest and probably the most reliable, way to trade that, very shallow pullback. If you're looking for consistency in your trading results, start thinking about how can I sell high. If all we get is a chance to sell low, think about traps. Right, so traps are your best friend whenever you're worried about either buying high or selling low. In this case, you're selling low. Now, if we really get lucky, maybe not lucky, but if we get up into this channel up top here, look at where the underbelly of that area is right there. This area is just primo. If we can get up in this area now traps aren't as necessary. I can now go in and rope in those buyers. Right? Just back here, right? We go up. The buyers try to buy the pullback. Those stops are sitting right there. And see how this works? See how it goes failure into pullback combination? You can usually draw a trend line across those lows right there. Right? This is a very common combination setup, a little price action setup. It's a failure setup, right? The buyers try and fail into a pullback. That's exactly what I would love to see here too. Let's get up into that area of resistance, get up, of course, right above that, up into that channel high, get those buyers coming in, trying to buy that pullback. That gives me now stops. And then as we go lower, I can grab that pullback combination and get short as we go back down. Failure into pullback combo. Failure into pullback combo. Very, very simple strategy, right? Very, very simple. Again, we're selling into the pops on this. And of course, the target is back to retest the low in these examples, right? Now, the big one, the one we really hope we get is off this big channel up here. Now, if we really pop going higher, great spot to sell short, right? Got a great risk to reward ratio. But remember, anytime you have a really good risk-reward ratio, you almost always pay the price for momentum. So when the market really pushes higher like this, now you got to let those buyers try twice. You can't just get aggressive and sell right into the stops. Let those buyers try once. Let them try twice. And then once I see them try twice, all those stops are sitting right below that low. And now what I'll do is I'll sell into stop losses. And then one of my favorite trades is to find a new channel, and this is where those little traps come in handy pretty well, right? Find that new channel there, and look for that trap, right? That trap. We saw example right here, right? We get that big pop up today. Market runs lower, that lower low, right? This, of course, is that big channel. You don't need a channel, but that trap, right? That trap is fantastic. So, of course, it'll be a true try failure. Again, you want to look for two tries because the momentum is so strong. And then again, maybe a trap, maybe a pullback, right? And we'll sell the top of that channel. Now, guys, don't forget, I'm just simply kind of scribbling on the charts right now, talking about what I'll be looking for tomorrow. I have probably 100+ examples of failures and traps and everything in between. I cover all the details in our Quick Start Trading class, a free trading course on our website. If you're relatively new to trading, or maybe you still haven't been able to kind of put the pieces together yet, or if you just want to see hundreds of examples of my favorite price action setups, I include all of that in our Quick Start class. It's a free trading class on our website. I'll put a little link up there for you in the upper right-hand corner. Again, if you're looking for more consistent results in your trading, that free trading class will show you how I find levels of support and resistance. Most importantly, how I trigger the entry setups only using price action. Very, very popular free trading class. I would definitely grab that link. Will pop up there for you in the upper right hand corner, and you'll learn a lot more there. All right, so we got that covered here as we go higher. How do we buy this thing as it goes higher? Right? How would I buy it? I would buy it, let's say we do get up to run these highs. Let's say buyers do hold that pullback and they jump. Right? Didn't do it here, didn't do it there. But if I can get this 1, 2, 3 reversal, right? 1, 2, 3 reversal. Now remember, it doesn't matter how strong that first leg is. All that matters is, do they hold that pullback? Didn't do it there, right? So we will sell into that if it fails. But if they can hold that pullback, now it's bullish. Now we mark up that high, I mark up that low, and I look for one of my 4 favorite entry setups off the low of that channel. Usually, those will be traps and basically seller failures, right? Failures oftentimes lead into pullbacks into strength. If you've taken my free Quick Start class, you know exactly what those price action trades look like. If you haven't done so already, yet, definitely grab that link in the upper right-hand corner, and you'll learn all those entry techniques that we use every morning in our trade room. And then, like I mentioned earlier, if we can get that reversal, now just simply mark up that low, or measure that low, measure it back up, and that's now where that final target is, right? That's where these buyers want to go, right? Pretty simple, right? Pretty simple. Again, lots of good stuff for the buyers there if they can get this momentum turning higher. Now, as we go lower here, right? If we go lower here, how would I trade this thing as it goes lower? There's a couple ways to do it. One would be a 1, 2, 3 breakdown, right? 1, 2, 3 breakdown. We basically take out the low. We pull back to the moving average, and we see a strong breakthrough. Didn't do it there, right? So what we really want to make sure we get some good confirmation, right? Get some good 1, 2, 3. Remember, we're sitting right at that measured move right now. I want to see if they can push through it. If they can push through it, mark up that low, mark up that high, sell that first pullback. And you see how I draw the channel, right? I'm not drawing the channel like that. I'm drawing it off the low. This is the easiest way to find pretty good entries off that. Off the low, and then you want that first test. The first test is always the best test as we go lower. All right, as we go lower. Got my target, of course, now on that measured move. And again, I'll cover all the price action entries off the top of that channel. I'll cover that in that quick start class that I mentioned earlier. Okay, another setup I'm watching if we go lower would be a strong move down, a shallow pullback to the moving average, a lower low in price, and a trap high. Okay, we call these 2 try traps. These are great when the market just takes a nosedive, right? Like back here. Market takes a big nosedive, strong move down, shallow pullback, lower low. Everybody wants that trap. Everybody wants that trap, right? That set up as we go lower as well. And again, that measured move, of course, is going to be your guide. Now, could I buy that low? What do you think? If we go back and retest that low, could I buy that area? You definitely can, right? We have this big move down. It's almost a guarantee we retest that low. Anytime we see that much momentum in one direction, that's why I want to sell into it. So let's say we do get that move back down. We find ourselves at that low. Can I buy now? Absolutely I can, but I have to let the bears try twice. Remember, the momentum is way too strong. Wait for exhaustion. Wait for those bears to try once. Wait to try twice. Once they do, all of their stops, all their pain is right there, right? Trade that reversal. 1, 2, bam, right? Look for that strong signal. We're buying right into those stop losses. And then again, don't forget, trade the turn. If we really get a strong pop, oftentimes this thing will really rip and run higher. If that's the case, find that new channel. Drill down to your faster time frame. We'll talk about that in the quick start class, right? And grab the entry off of that low. Where might we be going? Where do you think they want to go if they buy that low? Back into the range, and then potentially that big pendulum swing going higher. All right, guys? I'm sure there's something I probably missed out there at some point, right? Not to worry. That's why our trade room is so important. We'll fill in anything that happens overnight tomorrow morning at the opening bell. Looking good. S&P is looking really good here. Got some longs, got some shorts. Over on the Nasdaq right now, Nasdaq's pretty similar. Nasdaq is pretty similar. We have a quite a strong move down. The bears, of course, have all of the momentum right now. I think one big difference, as you can see here on the Nasdaq, is that if we do get the pullback, we're going to be right around that range. You can definitely see the S&P. Think about the S&P, right? S&P has all of that momentum. So it's going to be difficult for these, unless they take control with a reversal, it's going to be difficult for them to stick up inside, that trading range, unless, of course, they get that 1, 2, 3 reversal off of this low. The Nasdaq definitely doesn't have that luxury. The Nasdaq is very bearish. But you can certainly see right now that if we do get the pullback I want, we're going to be knee deep right inside that trading range. We are sitting at major support, so it would make all the sense in the world. This market comes right back up into that range, maybe a pendulum swing back up in the opposite direction. So, the reality is I can definitely sell this market right now. I just have to be a little more patient. That's all. I can get pretty aggressive on the S&P. This is definitely not the market that you want to be aggressive on, at least not yet. So the bears, again, have a strong move down, right? They would love to short off the top of that channel. The concern, of course, is the range. If the buyers were able to hold this in reverse, we pretty much know where they're trying to go. We have the pendulum swing. Okay, remember, ranges are balanced. Okay, so what goes up comes down, what goes down comes up, right? Until we see what? Until we see a 1, 2, 3 breakout pattern. Okay, so bears have control, looking to sell. We know where the buyers would like to go. If the bears keep it going, there's this beautiful spot down here, 15,260, a major support low. I'll tell you, there's a big bullseye right on that 15,250 area if these bears have their way for tomorrow. So a lot of this is the same right now. A lot of this is definitely similar here on the Nasdaq, but there's definitely going to be some differences. I'm going to really want to use the 2-try failure on this NASDAQ because we're so close to that trading range. Now, again, this could really be, look at this setup. This is a great trade right here. See that channel, right? A little guy like that. Strong move down, shallow pullback, lower low in price, trap, right? Now, if this was at 9:45 tomorrow, I'd be selling the heck out of this thing, right? This would be a great short if it was in the middle of the morning session tomorrow. Right now, we're talking overnight session. So again, I have to be a little more careful. I'm trying to kind of give you guys some ideas here, kind of what my game plan would be for tomorrow. So how do I sell it right now? Well, shallow pullback, look for that trap, right? Look for that trap. Again, my concern is not direction. My concern is location. Right, made that big move down. I just don't want to get too aggressive down here. I would love to see a little shallow pullback trap. Let's say now we go back up. Right now, I really like this area too. Right, I like this whole area really. This area right there, this area right there. I love this area. Again, the problem is going to be is that range. Those ranges, they love to drag these markets. Well, the reality is you'll see good setups fail miserably just because there's a range there. So what you want to do is you want to kind of think about how can I absorb that, right? So as we go higher here now, okay, unlike the S&P where I could just go in and sell into that failure, and it might work. I'll be looking for that 2-try failure. Let the buyers try once, buyers try twice. Now remember, there's a bunch of different ways you can take this failure pattern. And again, think about this rotation, right? So think about the failure. Now, a couple ways to think about it, right? We go up, buyers once, buyers twice. Do we get that trap? I mean, wouldn't that just be incredible? Like that would be the best, wouldn't it? Right? We go once, we go twice. Do we see a trap high? Right? Trap high would be fantastic. Again, same idea. The trap is definitely not required, but it sure as heck wouldn't hurt, right? Bottom line is 1 try, 2 try. Sometimes we don't get the trap. Sometimes all we get is a channel. Love those channels. I can sell off that one as well. And then again, find that new channel. Oftentimes this will be a trap entry, off a prior swing, and I can buy off of that. Sell off that, right? So 2-try failure into that first test. Retest back to that low. And again, I'm just simply scribbling on my chart right now. I literally have tons of examples, these failures and this right to the turn in that quick start class. So just excuse the scribbles here on this. You'll see real examples of how we apply this to our favorite markets inside that quick start, right? So that will definitely kind of fill in the gaps on that. As we go higher, if we go higher, how do the buyers take control? We go up, the buyers what? The buyers hold the pullback, yep, and they blast. Remember, not enough to see a real strong pullback. They have to give strong pullbacks are great, but they have to hold it and go. If they don't hold it, we just simply short back down to retest that low because we're bearish and we're at resistance. But if they can hold it, mark up that 1, 2, 3, find that new channel, and then we drill down. This is a 4,000 tick chart right now. We're not trading a 4,000 tick chart tomorrow in the trade room. We drill down though, find that faster time frame. I cover all the details in that free trading class I keep mentioning, right? And we find one of those entry setups off of that low. Sometimes what happens is the market just simply punches, right, really punches. If it really punches like that, I look for those little 2-try traps. All right. So if it really punches, that 2-try trap is money, right? Again, we've seen a lot of these, right? If it really punches, strong move, shallow pullback, right? Trap, sell it back down again. Same idea. Right? That's a bear example. There's a bull example, going back in the opposite direction, right? And again, kind of keep your eyes on that pendulum swing. There's also going to be that, you can see kind of that gray trend line I got in there. That area up top there is really, really a great spot for those buyers. So we'll see if they can take control of it. Remember, we're traders, right? We don't care what direction we trade in. Okay, if it reverses and flies higher, then find your entry and take the trade. Don't worry if, I want to sell short and now what do I do? And maybe I'm not doing it right. Forget about that. Markets do stuff that nobody understands all the time. In fact, believe me, even the best traders, probably 65% of the time, they don't really understand what's going on, right? There's only a few certainties in trading, right? So if it rips higher, definitely go with it, roll with it. And again, does it go 1, 2, 3 rip higher? Find that new channel, drill down, right, and get that first test. Remember, first test is always the best test, right? Or maybe we go up, the buyers once, the buyers twice, and bam, right, back down we go again. Would love that short, right, coming off of that high, and then again trading the turn, as we say, right? Grab the failure, trade the turn, and back down we go. I think a lot of money can be made as we go lower here. If we go lower, because you get that next measured move. That's 1 leg, that's 2 leg, that's 3 legs. Markets love to make 3-legged moves. Couple ways you can do this, and this will also apply, by the way, to the S&P 500. Now we've talked about, right, the easy one, right? Take the low out, hold that pullback, and jump. That's called a 1, 2, 3 reversal, 1, 2, 3 breakout. Mark that low, mark that high, and we can sell that first test because, of course, the first test is always the best test. Again, we're drilling down. We're finding price action entries. We're not just blindly selling off the high of that channel. Another one would be the market collapses and runs lower. Strong move down, shallow pullback, lower low in price. Traps, baby. Absolutely. All day, every day. It's a great trade. Can I find a channel? Channel, even better. Again, not necessary for a channel, but sure as heck doesn't hurt. Another one to think about, too, would be if we were to kind of roll lower and start to grind. Right? Start to grind. These are spiking channels. This could easily happen. Get that big trend line coming down. Then this could easily grind down. If it grinds down, again, no traps yet, just wait for the pop. What's going to happen is eventually the bears will grow weary of selling low and the market will oftentimes pop back up. That pop will usually feel like it's going to the moon. It's probably not, though. What's happening is all the bears are waiting to sell into that pop. Now, I'm not a big fan of just shorting into it. That takes the problem is it's very difficult to tell how high those pops can go. So it's better off when you get those pops like that in a spiking channel like this, wait for it to pull back, wait for some buyers to come in off the moving average and simply just sell into those stops with a failure setup. As you can see, I'm a big fan of going with momentum, trapping in those counter trend traders, because the easiest money you're ever going to make in the markets is when you're going with the trend, and all the naive or gambler traders, right, or just people who don't know any better are trying to go and are getting caught, right, on the wrong side of that mark. It's the easiest money you're ever going to make. That's why I do it so much in our trade room, right? Because you can feel it, right? Pops up, the buyers try, they fail, and you can just short right into those stop losses. And when they're getting out, they're smashing that sell order, right? They're not waiting for it. They're get me out of this thing, right? Price will drop. So again, there's some options there as we go lower. And just like on the S&P, if we were to take out that low and then bears try once, bears try twice. Now, I'll tell you the same thing I tell my clients. The bigger the move, pretty big move here, the bigger that 2-try reversal is going to be. Okay? We're not looking for this little microscopic 1, 2, and then back up. You know what I mean? It's not enough. When you see a real strong move, you got to give those bears 1, 2, and they usually keep it going. That's why I don't try to pick reversals, right? But once I take the lows out, then again, big move down here. So think about, right? This could take a half an hour, 45 minutes, right? Let them try once, go up. Let them try again. Now, do I see a trend line? Nice strong signal off the trend line. That's a great setup. Do I see a trap? Do I see a trap below that low? That's a great setup. Sometimes what happens is the market will kind of grind and go higher. I can find a hidden channel right off of that low as well. But the key is 2 very separate tries. And remember, the bigger the reversal, the bigger the move you're going against, the wider and the bigger those 2 tries need to be, because you got all that momentum. And if we can get that 1 try, 2 try reversal, right? Then what you do, once see it pops, you know where the pendulum swing is now, right? That technique's pretty easy. Then what you do is you go grab that new channel. This channel can be sometimes very steep, so don't be afraid to draw it steep, and grab that first test. Sometimes too it'll do this, where it'll really rip. It'll go like this, right? Where it goes 1, 2, 3 like that, and find that new channel there, right? That 1, 2, 3, drill down and buy that one, right? Again, we're trading the turn. We're trading the rotation. Again, lots of examples of that stuff inside that quick start class that I keep mentioning, linked up in the upper right-hand corner. All right. Love the NASDAQ. Just be careful on the pullbacks going right back up into that trading range. That's definitely where the S&P is very different than NASDAQ right now. Last but not least here, over on the gold. I'll tell you, gold is a very exciting market setting up for tomorrow. You can see how bullish this market is right now. But we probably should take a peek. Just look a little bit left here. Let's look at left. Look a little bit more. A little more. There you go. Right. Looking left on the gold right now. What do you see? Big old range. Big range out there, right? That big range. What are ranges? They're magnets. Yep. They are magnets. What else do we know about ranges? We know they like to rotate, right? They rotate back and forth with what we call pendulum swings. The amount below, the amount above. Look where we are. Look where we are. Oh boy. Right in that pendulum swing. And we got one more. Oh yeah, they keep coming. One more. Top of that, right, triangle. See the rotation? See how the market rotates back and forth in that triangle, rotates back and forth? Yeah. So, now don't get me wrong. I mean, come on, let's not kid ourselves. This is one heck of a bull run. This is a very bull market right now. But I'll tell you, if there's one place where you may see some bears trying to push this thing lower here, this is absolutely it. So we're definitely bullish. There's no doubt about that. I would love to be a buyer on this. But in these situations, when we have all of this, again, resistance, stacked on overhead, the best way to buy a market like this, there's 2 ways to do it. One would be just stay patient and wait for that next leg higher. Wait for proof. That's an easy way to do it. That way you're not getting too, risky, right, on your entry. Another way to do it, which is one of my favorites, is to try to trap in the bears. Once those bears chase this thing, then you can buy it and go back up and retest the high. Okay, those are kind of the 2 ways that you want to buy this. Selling this is really, I think, the easier way to do it, because we've already got the buyers now trying once. If I can go lower, I'd like to get these buyers coming off this trend line, right? Try twice, and you can already see there's that pattern I keep talking about, right? There's that pattern we keep talking about, right? There's that hidden channel we keep talking about. So if you've been watching the video so far, this should look very familiar, right? This should look very, very familiar. Rinse and repeat, rinse and repeat. Okay, so what if we go up? What if we go down? What if we go sideways? How do we trade it? I'll tell you, I wouldn't be surprised if this market, again, the range below us is the magnet. If the market goes higher, there's a big bullseye right up around that 1822 and change up there. Market goes lower, the range, of course, is the magnet, but obviously a full rotation is where these bears want to go. The bears could easily find themselves right back at that 1780 area by this time tomorrow afternoon. All right, going higher, going lower, going sideways. First of all, we do oftentimes see these kind of bull breakouts or bull moves. They chop around going sideways, and then for whatever reason, the buyers go, oh, look, it's a channel. Get me in, and they blast it back up. So, if this was tomorrow at 10:15, or, it's gold, so this is tomorrow at 8:45, because you wouldn't want to trade gold after, too late after 10 o'clock. That's a great trade, tomorrow morning. But, overnight, maybe not the most reliable thing in the world. Now, how could I trade that jump? Can I trade that jump? Absolutely. So if we do end up running off of that low, think about something like this. 1, 2, 3 move. Find that new channel, buy that first pullback. Okay, and I know that's a little bit, right? That's a little bit, it's relatively conservative, right? But again, look where you are. Look where you are, right? I'm not going to buy that first pullback. It's just not my style, right? I know where I am. I know I have that range below us. You're more than welcome to buy that first pullback. But there's a good chance, though, we go back and retest that high and then struggle and end up, come back in that range here. So if it does end up chop, 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 and then blast, think about now that 1, 2, 3, find that new channel, buy that, right? And again, remember, this is a 1500 tick chart. We're going to drill down to a faster time frame, and we'll use those price action setups to talk about in the quick start class to buy that first pullback there. Okay, if we go higher here, again, let's say we chop around, go sideways here, strong jump up, shallow pullback, higher high in price, trap low, right? Bear trap. Again, love that setup. Be an easy money trade right there. Easy money trade, right? So watch out for that one as we're going higher there. Or as we, again, if we keep going sideways more. Okay, let's say, for example, we really sit here for a while. Okay, the market really sits and really sits and really sits, and we go sideways there the entire time overnight. That's basically one new range. If that's the case, you find levels of support below the range, and you combine those levels of support with breakout failures. We wait for the breakout, wait for those poor sellers trying to sell into support levels with a range magnet overhead, and we buy right into those stop losses. Again, this is if this range continues, right? It begins to really get ridiculous. It's going sideways. It's not kicking higher off that channel. It's not pulling back. It's just treading water. Okay, which could easily happen. Tomorrow, of course, again, next couple of days here, as we go into quad witching, that could easily happen. Think about a failure. Okay, we see a lot of these in our trade room. These failures at support levels below that trading range. I probably have 2 or 3 dozen examples of this one in that quick start class, right? Linked up in the upper right hand corner. Also linked up in the description of the YouTube video, right? So definitely grab that. That should cover us. On the buy side there, I'm sure there are some other variations of that, but I can't cover absolutely everything here in this relatively long video. How do we sell this market right now? What do you think? What's the best way to short this? There are a couple ways to do it. I mentioned one earlier. As the market, of course, goes one, pulls back, I would really like to see the buyers come in off of this channel. When you're trying to pick a top in this very bull move like this, you definitely want to anticipate, if I was a buyer, where would I be buying? Put yourself in the shoes of the buyers. Where would the buyers be buying? They'd be buying off that channel, right? Then make sure you incorporate the 1, the 2, and then again, find that new channel off those lows, up around that high. Maybe we get lucky like the Nasdaq right today, and we get that trap right off that high. And then again, as we go, and again, it could be a trap. It doesn't need to be a trap. It could not be a trap. It may just simply go up. That nice strong signal, right? Nice firm signal there. That's your short. As the market now begins to lose ground, it begins to fall, going lower. We mark up that low. We mark up that high. We drill down to our faster time frame. And this is the trade that you cannot miss. That is the trade you cannot miss. I tell my clients all the time, if you don't want the reversal, I completely understand. That takes a little bit of guts. It takes a good read in the market. It That's an advanced setup. But if this market turns over with this 1, 2, 3 move now your job as a professional is to find a way in off that high. Okay, that is the most important short for the bears because now momentum's on their side. The range is right below us. Now, let's face it. Sometimes these things, they go up once, twice, they collapse and run lower. If it collapses like that, that's when traps are your best friend. All right, and this is definitely where a little more time will tell. We'll know more. But if it just dumps, you know what I mean? If it just dumps and falls out of bed there, that trap is your best friend. Do I get a channel? Is there a channel? Maybe there is, maybe there isn't. But again, if this thing goes up and goes into free fall here now, any traps, right? That is like your job, right? Do not miss. LeBron James gets paid to hit jump shots. Your job is to grab that entry as it turns over and rolls lower. Tom Brady gets paid millions to throw touchdown passes. Your job as a trader, if you're not getting that short off the high, is to find your way in trading that turn, right? And again, if it really collapses, look for those traps. As we go lower, keep an eye on those traps. We saw some examples of that on the S&P earlier, right? And again, do I get that? Do I have a channel on there? If I do, great. If I don't, doesn't matter. Find the way in on that going lower there. That's how I would short this thing going lower. And then, again, sometimes it will collapse and kind of run, grind. If that happens, just wait for the pop. At that point, everybody's waiting for it. Find those buyers coming in, and again, sell right into those stop losses with that spike in channel. Right? Again, maybe it's a big channel up top there, but all you need right now is that big pop. That pop will be sold into so aggressively because everyone's trading that turn. All right, guys? And then if we do end up getting all the way back down, that's exactly where you can get the 1, the 2, and rip it back higher again, right? We do end up way back down again, 1, 2, and run it back up. We've talked about that quite a bit, right? Find that new channel, trade that new channel, and trade that rotation. All right, guys? Boy, I'll tell you, lots of great trades setting up for tomorrow. As you can see, once again, remember, we're traders. Okay, we don't care about what direction. Now, I will say again, if the markets are choppy tomorrow, again, they probably not choppy. Again, you're going to probably see some pretty good volume, some pretty good volatility. But remember, don't force those trades over the next couple of days as we go into quad witching on Friday. No newsletter for the rest of the week. Be back to our normal tricks again next week. We'll see you guys for a full schedule the 4th week of the month of September. Don't forget, though, I will be there with you guys as a client of mine, so make sure you guys get joined up. Don't forget to call the office if you guys have any questions. I'll put all of the membership links you guys need right below this video on the blog. And thank you so much for tuning in. Sorry I'm late tonight. Busy day here ahead of quad witching, and I'll see you guys tomorrow on the trade. If not, we'll see you guys next week here on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time, okay? Adios, amigos. Bye-bye for now.